Firstly, welcome back to the channel. We're the Digital Asset Research team, and this is part 2 in our Fibonacci tutorial series. So if you haven't watched the first one, go back and watch that first. And if you have watched the first one, welcome to part 2. And in this video, we're going to be discussing the Fibonacci Retracement Tool. So what is the purpose of the Fibonacci Retracement Tool? Well, it's used so that we as traders can identify future levels in which price action will likely react during a pullback or outside return. Now I want to point out the levels which show the most importance, which are as follows. The 23.6, now this identifies a very strong trend. The 38.2 identifies a strong trend. The 50% level is not a Fibonacci number, but this does hold psychological value. 61.8% level, which as we've spoke about before in the previous video, is the golden ratio, and the 78.6 level, which identifies a weakening trend. Now I'll set an example here. What we'll do is we'll just pull up the Fib Retracement Tool. So to pull up the Fib Retracement Tool, you just go onto GAN and Fibonacci tools and then select Fib Retracement. Now I've got mine selected just in my toolbar below here, which you can do by just clicking on the favorites, and I'll pull that up. So the first thing that we need to do is identify the swing high and the swing low. So you'd have your extreme high there and your extreme low. So you've applied it to the swing high and the swing low. And what we're trying to do is we're trying to identify the strength of the trend first and foremost, and where price is going to stick. So just as an example, we've come from our swing low here, and we might get some reaction here. Get some reaction at 38.2 level, 50% level, and we're just trying to identify the strength of the trend. So if we did come all the way up to the 786 in this example, we'd know that the trend's actually weakening and a reversal is possibly near, or the probability is higher that a reversal is possibly near. Alternatively, if we're seeing it come up to the 236, then that has identified that we're in a very strong trend and a reversal is possibly not near. So let's put that example into the charts. So if you recall, the first thing that we need to do is pull up the Fibonacci tool. So we've got the Fibonacci tool and we're looking at the extreme swing high to the extreme swing low. Now you'll see that this has already played out slightly. So you would have initially had your swing low here, and you did get slight reaction there. You got a reaction to the 0.5 level on the way down, but ultimately this is what the level that we're looking at. We then broke the low of this and continued downwards, so we can then pull the Fibonacci Retracement Tool and put it to the most recent swing low, and you can see already that we've managed to get a reaction from the 236 several times. We've broke through the 236, tested the 382 level twice. We've come back down. 236 as support several times, broke through, and now it's acting as resistance, and it's looking like we're continuing lower, possibly to test these lows here. So that's B and B that I was looking at in this example on the daily chart, and you can see that what we can tell from this already is that we've seen an extreme high and extreme low. We've come back, we've tested this level here, showed a little bit of strength, we've broke through, we've tested the 382, we've actually got the 200 moving average above that as well, which will act as additional confluence. So it's more bearish at the moment, and it's looking like we're continuing lower. We've seen that the 382, if you remember, the 382 identifies a strong trend. So in this example, a strong trend downwards. So that's the Fib Retracement Tool, and you hope you like the second video in our tutorial. Give it a thumbs up, share the content with others if you do like that. Many thanks guys, bye.